Hi, everyone. I stated yesterday that the market needed to draw a line in the sand today, and it sure did. I tell you what, it's been a long time since we've seen a day like today. To sell off like we did intraday and to reverse like we did and close at the high a day on the Russell 2000 right after hitting new 52-week lows and failing that October 2nd low. This is called a 2B reversal. This is bullish for the Russell 2000. However, with all the recent damage and now the downtrending 50-day moving average with the rolling over 200-day moving average, it is more than likely to be choppy here. So expect it to be choppy. If you're a new investor, cash is still king. Like I said going into this, being short's not the way to play it. That's why those shorts you put on yesterday were only 2% positions. And by God, there is no way I thought they'd fail like they did. My instinct this morning when I woke up to make sure trades went through was to put sell stops on them. Did not follow my instincts. Big mistake as BIS has failed. That is a full cut loss. SDAO with that volume to me is a huge failure. That's a cut loss. Also, I want to take half off of SQQQ, SRTY, and SPXS just because huge volume reversals, big volume in the ETFs, big volume in the indexes. The NASDAQ, as you can see, oh man, the volume's not on this for Telechart. Great. But the bottom line is higher on both indexes above average. But like I said, with all of the recent damage and now the extreme intraday moves you see, it seems impossible that we just rally straight up. If we do rally straight up in a V-shaped fashion, you can bet your life that we'll hit new highs and roll right back over like we've done all year long in 2014. V-shaped rallies have new high failures. That's just what happens. New York Stock Exchange didn't quite put in a 2B reversal, but same thing as you can see on this chart pattern. Same thing you can see in the S&P 500, still below the 50-day moving average on that index. The NASDAQ, the Dow Jones Industrial Average is retaking it, but still below the recent highs. It needs to close above 170099 before we can even think about putting our model back into buy mode. That being said, we are back under a neutral condition on this market based on the way the indexes acted today, pre-FOMC and post-FOMC announcement. Quite an impressive reversal, especially by the Russell 2000 on the lows. And my indicators are very oversold, starting to turn up, so it's something to watch. But remember, whenever they get oversold and turn up before, it takes time before the rally starts going, except here in February. What a weird rally that was. And you see, once again, what I'm talking about. New highs. Bleh. So be careful here. More than likely, we need some backing and filling. That being said, got 3 new long signals and an add signal today. So let's start it off with one long. FL. FL is bouncing off the 50-day moving average on above average volume. You can see TSV is starting to turn back up. MACD2 starting to use these as confirmation right now just because new longs have been shitty. Still, I'm not afraid to take the trade because I know that's what you got to do here. The normal reaction would be to be like, oh my God, what the hell's going on? Just got whipsawed again in my hedges. Oh my gosh, and just sold some stocks, whatever. But it's the tail of the tape. It's telling you that the market's not healthy. A lot of the longs that I've sold are even down way lower than where I sold them. So it's been good trading overall considering what could have happened to the downside here before we actually hit the October week where we actually start to rally, which is in about a week and a half. So until then, FL, only a 2% long position because, like I said, dangerous market. I'm not going to 5%. I have no charts out there that make me say, oh, you know what, when that breaks out 10%, when that breaks out 20%, none. They're going to have to set up before I can even think that. But there's nothing like in a super tight range, close to the 50-day moving average, with 200 near the 50-day moving that says 20% are right there. There it is. It's just not out there yet. So FL is going to be a 2% position. Twitter, that would have been a pocket pivot point signal, by the way, if the 10-day moving average would have been at price, but it's slightly above price, so it's not. Twitter producing another pocket pivot point signal, following through on the breakout on the 3rd with another above average volume pocket pivot point signal. MACD's already been trending up overall since the July lows. TSV's looking good. So this also is a 2% position. After I get long this one, I'm going to probably put hard buy sell stops on the book just because I'm not a big fan of losing money right here, especially after losing money on a few of these hedges. That was way too big of a hit in BIS and SDAL for me, considering the potential reward in that setup. That's ridiculous. And then also SEMO. Brought up SEMO yesterday. Told you it was one of two stocks I like, VICR, which by the way went up 2.2% today, and SEMO. SEMO now is increasing its BOP again to green BOP. Money stream breaking out to new high. Relative strength line is almost there while price isn't. Another above average volume day. A 2-day chart looks really good. The only problem is this base, compare it to its previous bases, it's not as tight, not as symmetrical, so it's risky. So even though SEMO is a good long here, if it doesn't move up immediately, going to have to take some off. The good news, MACD, as you can see, is turning up from basically way oversold conditions compared to recent price action, and the TSV is trending higher quite powerfully. So overall, it looks good, but we're not going to know if it works out until we really get a follow-through day on this market because it's just pretty scary. And then I also got AGIO giving me a kind of an ad signal. BOP has stayed max green during the entire time. During the entire pullback, price action's been tight, volume's been lower. Volume picked up heavier than the session before today, and it broke out above the closing and opening highs of the third, 64.19, 64.38 close. I'm going to go ahead and consider that a legit breakout. It's not too bad when a very speculative stock, but it's in my perfect speculator scan. It's beautiful. It's one of the best looking stocks in my perfect speculator scan besides our current holding, GMCR. And MNST is actually one of our best stocks that we recently went long, but we'll see if this trend continues. So SEMO is probably the nicest looking one out there, but once again, the base isn't right. Foot Locker is the safest. AGIO is overall in the perfect speculator scan. And then Twitter has the biggest earnings and sales growth, so there's a little something out there for everyone. Other considerations was an add to OTEX and an add to AVGO. You might want to study those two to see if you want to do that. There were other stocks that I put in bold on the new positions page that you can look at for possible also long signals. Thank you.